The House Ways and Means Committee recently proposed tax legislation that is making its way to the House floor. Something to keep in mind, this is just a draft proposal. Nothing has been passed into law at this point in time. I wanted to point out, though, a few key provisions to be watching. The first, capital gains tax rates. Everyone is watching this one pretty closely. The current top tax bracket is 20% for capital gains. The proposal would increase that tax bracket for high income earners only to 25%. Second, the top marginal tax bracket is likely to increase to 39.6% if the proposed legislation does get passed into law. Third, corporate tax hike. The legislation also increases the corporate tax rate to around 26%. And lastly, the estate tax exemption. The current estate tax exemption is $11.7 million. The proposed legislation would lower that exemption to $6 million. So how does this impact you and your family? One thing to keep in mind, everything is a draft at this point in time. The proposal still needs to make its way from the House to the Senate and on to the President's desk before it becomes a law. Second thing to consider is that we want to look at the way taxes impact your overall financial plan, not just how they impact an individual transaction. So I encourage you to reach out to a financial professional to discuss your entire financial picture before determining how to make any adjustments or changes based on the proposed legislation. And lastly, the proposal is unlikely to be retroactive. Currently, the one date to keep in mind is September 13th for the capital gains tax hike. All transactions prior to this date would fall under the old tax law of 20% if the proposed legislation does get passed into law. Drop a comment below or reach out to us if you have any questions about how this might impact you and your family.